Good morning, everybody. It's Friday. It's the end of the month. Here we are. Everything's going to happen today. It's going to be a kick-off day. I can smell it. Morning, Kay. How you doing, mate?
Morning, mate. Morning, everybody. Where's the
morning? No Stel today. He's got some jobs he's running around doing. Probably some more surfboards to polish and purchase, ready for the summer. So just me and the K-man today. And so we shall get stuck into things. Gonna start off with some data and looking at China, which will come out yesterday, I believe. Or where is it? Is it even on here? There we go. PMIs from China, manufacturing and non-manufacturing. Manufacturing staying in contraction, but coming out as expected, a 2 pip improvement there. Services, though, falling more than expected, down to 53.2 from 53.7. So a little bit mixed on the data front there. Over on the one moves, and the one got fixed again, fairly low, 7.2258, so only 50 pips up from where it was yesterday, again to the low end of expectations, was expected at 7.2525. So further indications from them that they want to apply the brakes. Then earlier this morning, or not too long ago, the PBOC, via certain news wires, backed paper, they're calling it, said that the yuan is likely to remain basically stable in the second half of the year, and that the recent yuan move is within a reasonable range. So that's a bit of a green light for the moves to continue. They're not putting a roadblock completely in the way of it. And here we have our nudge up into 128s, again as high as 128.50. So that continues. We're now looking up at these 730 highs. That's if we can get and hold above this 128 area. That's where we're looking, these highs, and it's going to be very important what happens when we get up there. But so far, they're not really sending out any big torpedoes about that. What do you make of it, Kay? Still, they're happy to let it go, it seems.
They seem to be happy to let it go. I'm going to be very interested to see what happens next week, because okay, we're in full swing of the end of month and quarter and half year, of course. So today a bit everything can happen. We've got a bunch of US data out, but got the feeling that the market will still be buying dips in this for as long as the PBOC or whatever official body says enough is enough. So after all, it is possible that we reach those prior highs again.
Yeah, absolutely, mate. Absolutely. So
and the thing is that the area we're constantly making higher lows, right? So the market, this means the market is still very confident in what it's doing. Got your second, not the first, on the chart.
Can we go back?
The first, not the first blue area, but the second one there, around that 717.5, 720.
Yeah.
I think that's going to be the signal. Hold, and this thing continues. Break back below, then the party may be over. But before that, I mean, there's absolutely zero reason to change tack. I'm flat for now, but I'm going to be very interested to see what happens at the start of the week, or even perhaps tonight. You know, if we get what most of the expectations are, and that is a bit of a lower dollar this afternoon. If dollar China perhaps moves with it, can provide another opportunity to get long again into next week. It's, as you say, as long as we are above the area, I mean, nothing's changing.
Yeah, very much so. I actually missed that move into 728, so I'm looking for another move to take some off, but we'll see what happens over the fixes with that one. Right, coming back to, let's go through some of the other data that we've had as well. Tokyo CPI coming out. So this is the new month inflation numbers. core CPI missing expectations but matching last month. Headline CPI coming in a pip lower, but still remains pretty elevated there. So it's that CPI reading there as well, coming in at 2.3%, a pip low as well. So there is some signs of inflation pulling back, but much like everywhere else, it's looking sticky, and certainly nothing running too much lower that's going to at least impact what the Bank of Japan are doing. They say they're still expecting inflation to come down in the second half of the fiscal year, whether that happens or not, but we're still printing months above their 2% target, and it continues to happen. So the clock is ticking, the sands in the egg timer are running out between when they get to that period, and we'll see what inflation's doing. So definitely more clock watching ahead as far as Japan is concerned. We had Deputy Governor Himino coming out, and was he hawkish? He said recent price rises are stronger than thought. Domestic demand emerging as a new factor pushing up prices. The bank must scrutinise the effect of such factors on inflation. All very hawkish sounding. And then he said, best approach now is to maintain ultra easy policy and must be vigilant to market signals in guiding policy. It's like one step forward, two steps back, isn't it, mate?
Yeah, but I think we found our commentator in the Bank of Japan minutes, right? We can click on it now. He's probably the one who mentioned those things already during the Bank of Japan meeting. He's a deputy governor, so in theory, Ueda should have a bit of interest in what he's saying. But yeah, I mean, for as long as they say that we continue to go the way we are, I mean, it's like a broken record. What's going to change for the yen, unless we see some natural weakness in the rest of the currencies around it? It doesn't still bode well. You know what? I think next week, the start of the new month, start of the new quarter, everywhere. It may be a very interesting week for the yen next. Imagine that today those US data coming out are strong again, and then we've got those end of month and quarter fixings, perhaps, or likely also. I don't know, for the dollar globally a bit on the weaker side. But then that will have been 2 days of reasonable data. Of course, if they're weaker, the dollar could lose a little bit. But imagine that even staying equal after the last couple of days data in the US, I can imagine next week is going to be a bit crucial for the yen pairs, and not only dollar yen. You know, if all those euro yen, sterling yen, you name it, even the commodities, commodity currencies, antipodians, still keeping the pressure on the yen. So I think next week should be an important one.
Yeah, I agree with that. I think today might be a good opportunity to play the fundamentals off against any month-end stuff. If we do get strong PCE numbers, shut up. If we do get positive numbers, i.e. higher PCE readings, and the dollar reacts high to that and goes up, and then we get fixing stuff at 4 o'clock that sends a dollar lower, that might be a trade to look at, because the fundamentals are always going to overtake what happens at month end. So it's not easy to take a side now, but you can use the data moves versus the fixed moves if there's an opportunity of a bit of divergence comes in for that.
Yeah, but okay, I'd argue that if you and me included, if we are a little bit nervous about what may happen on interventions or so, there perhaps better currencies to do than the yen. But yeah, I think if the fundamentals in the US now, those data remain strong, what's going to stop the dollar yen? What's going to stop the yen crosses? It's really on the interventions, right? So we could see that 200 points add on to any yen pair if the data are strong this afternoon.
So quick question on intervention, something I've been thinking about. I mean, my thought is that intervention isn't going to do an awful lot. It's only going to slow things. It's not going to reverse things like we saw last year, as I've been mentioning. I think we're in a different situation. Would you buy an intervention dip?
I think it's going to be in the context of current economic data. Europe is slowing down a bit, I think, but in the context of those data, I don't see how MOF can keep on its own without help of fundamental data. You remember last time when they intervened, they had the help of a first shot lower in the US CPI, right?
Yeah.
But now they don't have this advantage right now because CPIs are coming off, and yet the yen is weakening. So I think if I have to stick a number on it, I think it's going to be very tough for them to hold dollar yen under 140, for instance. To stick a rough number on it, of course. I mean, you never know. They can send it 6 big figures lower, but then I reckon that they won't be able to hold it down without the help of Bank of Japan starting to normalize also. It's going to be very tough. I don't think there's too much of a way out right now, unless Bank of Japan starts to move, you know.
Yeah. So would you buy a dip?
Yeah, I would definitely. Definitely.
Yeah, I'm thinking the same way as well. You might need to give it a day or so. I don't know. Depends on
the timing is going to be important, right?
Yeah.
And looking at how many rounds they are willing to throw at it. But if the rest of the dollars, for instance, is not coming off, thanks to better US data, what's going to hold dollar yen down indefinitely or for a longer period? I was talking to a mate of mine in Asia as well, and that was about the same view. They say like, what if it's exactly my view. If they intervene now, they're going to run into fresh yen sales.
Yeah, no, I agree with that. Mike, just want to clarify, when I was talking PC, I was just talking generally the data, not looking at it in individual points. PCE is, or core PCE is expected to come in unchanged at 4.7%. Expectations for the headline PCE are a little bit mixed. There's some expecting to come in a little bit lower, some expecting to come in unchanged. Generally, the core number is the one we're going to be watching. So if that comes in higher, then that's obviously going to help the dollar and yields. But when I was first talking about it, I was just talking about it generally if it comes in hotter than expected. Right, where were we? Back on the data, because there's a bit more out this morning as well. We had some final GDP numbers from the UK, nothing much to talk about there, coming in as expected in the final number, 0.1% quarter on quarter. It's been 0.1% pretty much all the way through. So not a negative, which is a positive in itself, but not exactly booming there either. There was a bit of surprise in business investment and things like that coming in a little bit higher, which probably did a bit of the heavy lifting in that positive number there, but mixed otherwise overall. German import price data coming in another negative, coming in as expected in both month-on-month and year-on-year numbers, but still negative numbers we're seeing from more and more of these price components, which is going to feed through into the inflation picture. Retail sales coming in up 0.4%, so a little bit of a beat there. Year on year, not as bad as expected. And more CPI flash numbers for June coming in. France coming in lower than expected on the HICP, lower than expected on the CPI number. I looked at the measurements within that. Again, it looks like energy did a lot of the hard work here in why those numbers were lower, but there were some other numbers that looked a bit more stickier, particularly in the some of the higher weighted components there. So stickiness is what everyone's looking for in these inflation numbers as well. On the unemployment, unemployment was 28k versus 13 expected. The unemployment rate ticking up 5.7%. So a little bit of weakness in the jobs market in Germany. Coming over to the main Eurozone number, and again, stickiness well evident. Headline CPI or HRCP coming down to 5.5%, so lower than expected. The core went up, but not as much as was expected, but it's still a higher number. So expected 5.5 came in at 5.4. This is the important number for the ECB, the core number. A lot of energy again behind the fall in CPI, and while we're getting some decent moves lower in those, it's going to take time for that to feed through to the core numbers. And on the other side, a lot of ECB members are worried about the potential for wage inflation to offset what we're going to see in energy coming down. And it's going to be that balance that decides how sticky core inflation is going to be. If wages starts coming down and energy prices start filtering through into the core, we should see that number coming down. I'm going to pin it the same pretty much as the Bank of England, probably when we get into August and start getting July data, and from August we may start to see a shift lower in both measures happening at once, so the core starting to come down as well, which might take some heat out of September ECB rate expectations, but it depends how much it comes down. Certainly if it does, we're probably not looking at any more hikes past September, but we shall see the game that the Guard wants to play with that anyway. Moving on, Riksbank Steden said that the krona weakening will reverse only, it will weaken and reverse, only question is when that happens. So far, they're not calling it intervention, that hedging, as we spoke about yesterday. But there's been a little bit of balance since those comments. I'm going to pull those proxy fibs because I keep having to draw them higher every 5 minutes. So I'm going to take those out in a minute. So it's not intervention, Kay.
Wow,
just
come on. I mean, who are they trying to fool here? You know, you're hedging your FX reserves, right? I mean, that's the first time I heard that in 40 years. So it's just, I mean, whatever. They are willing to let some of their reserves go because the Swedish krona is that weak. Is that like, and then in their next report they say, like, they will probably say, like, we made 10 billion stocky profit on our foreign holdings.
Yeah,
that's going to no, okay.
The SNB missed a trick there. They could have called it all hedging, what they were doing, and save themselves some grief.
Portfolio managing.
Exactly. Right, over to the Bank of England and Temrero, outgoing MPC member Temrero. This was her last meeting last week. Said that her vote to leave the rate unchanged rested on what the latest data implied about the medium term. She said tightening already in the pipeline would be sufficient to bring inflation back to and most likely below the target. Said the more the bank hikes now, the sooner and faster the BOE will later need to cut rates. I actually agree with her on that. If the higher they go, the quicker they will have to put it back because they will go too far as usual. Up to now, they shouldn't have done what they needed to do. Now they're at the point where they're about right what they needed to do. Now the risk is they probably go and do more than what they need to do. Such is the life of the Bank of England. So I actually agree. I wouldn't be surprised if they cut quicker than they thought they'd need to. So that's going to be a trade to look at later on down the line. Over to the Fed. Bostic was coming out with some very cautious tones. Says, I don't see as much urgency to move as stated by others, including my chair, meaning Powell. I'm looking for more signs that a slowdown is happening in the next several months. Core inflation has plateaued, and there's signs underneath it might actually still have some improvement coming. There are measures today suggesting that inflation has started to really get much more into the range of normal. There are undoubtedly scenarios where we could move at 2 meetings in a row, but not expecting that will happen. So one thing that did happen yesterday, which was a bit of a surprise, was a decent uplift in the final Q1 numbers from the US. Usually I only give these half a glance because it's really old data, considering we're just about to close up Q2. But when there's a big variation, it's worth looking at. And GDP, as you can see there, coming in at 2%, so 6 pips higher than the 1.4% prior revision. So a decent beat there on that. Don't worry too much about the core PCE price numbers there, although it does hint a bit to what the numbers are coming out today, because they're May numbers as well, but this is old stuff for that anyway. So a decent set of GDP, 2%. That's they'll take that to the bank in the US. They're quite happy with that. Jobless claims out as well, a little bit on the low side again, 239. So no problems. If this 266 had kept or 265 had kept increasing, we might have started to worry, but no, it's had another drop back to 239. Continuing claims hovering around this 1.7, 1.7.5 type area. So again, no worries coming in from that. So on to today, and we need to look at what's coming out, because obviously PCE data is a hot topic today from the US. So we'll just have a quick look at the numbers, what we're expecting from that. So as I said, there's different forecasts coming out here. This one's got a rise in the headline PCE to 4.6%. That core number, most are sticking with an unchanged number there. So some are expecting a little bit of a tick up. You'll remember that Powell came out on Wednesday speaking at the Century event. I'm sorry, after the Century event. I think, what was it, yesterday morning? Can't remember. But he came out afterwards and said that US core PC inflation likely rose 4.7% in May, and the overall PCE index is estimated to have risen 3.9%. So there might be a little bit of discrepancy going on between what we're expecting here and whether Powell has actually tipped the nod. So it may be that PCE comes in lower, but the core remains sticky. It's really going to be about the core. So if we get a lower print in the core, that's going to move markets. If it comes in as expected or probably higher is going to be the most damage, then we should expect the dollar and yields to rally. PC is a completely different measure to CPI in a lot of aspects, but it should usually move in the same direction. And we saw CPI obviously coming down just before the FOMC. What are you thinking here, Kay? Is it going to be as sticky as the market thinks, or does it bring a bigger move if it's lower in both measures?
Yeah, if it's lower, we are going to create a bit of an imbalance with the numbers that we have seen yesterday, right? And then even though they are a little bit less important, we have to take into account what comes after that, another PMI out of Chicago and then the Michigan, those inflation expectations as well over there. So it's going to be a bit of a bag here with a 1.5 hour gap between the both sets. But I kind of agree with you, and it should, in theory, slide a little lower. But then, do we have this kind of uptick as we've seen in Germany, for instance? It's really, you know what? For the sake of the markets, I'd like to come them out in line and not have too big a variation. But if they would tick a little bit lower, then I think we are going to see that little imbalance. And if the expectations for month end, quarter end are correct, the dollar may get a little knock on the head there. But yeah, we'll have to wait those numbers. If you look at that, if you look at those latest releases, the one you're on there right now, it's really it's very, let's call it sticky, but it's also very how should I say it, stable.
Yeah.
So I mean, assuming it's stable, I'd argue that that is not going to be dollar negative. Let's put it
Yeah,
that.
that's the thing. Yeah, I think it's the stickiness that's coming in to it. I mean, you can see the difference between the core and PCE. PCE is more following what CPI has been doing in that aspect. We can look at it over the last couple of years. It's still not coming down as chunkily as CPI, but the trend is still looking your friend. We've had a little bit of an uptick here. So I guess it depends on what's going to happen. Is it going to keep creeping up? The thing is, if it's not going down, there's only one other way it can go. It could be a bit of a pause, but as mentioned, it's the stickiness that central banks are worried about now, not so much whether it's actually going to go up. A lot of people, as we just heard from Bostic, calling a top in things like inflation and whatnot. So we have to see what's going on. But I think based on the CPI, where it came down from sort of 9% odd and continues to come down, I think naturally it's going to pause somewhere and maybe go a bit sideways, which then falls into the higher for longer message that we're getting from the movers and shakers from them. So anyway, that's the PCE data to look at there. Look for big variations, know what the market is thinking before we're going in. Later on this afternoon, we've got the Michigan final numbers over there, so keep an eye on that. Then we have the F.A.C.E, which is going to could potentially be pretty big. US markets on half day Monday and closed Tuesday due to Independence Day, but I think we're probably going to see markets die a death probably after the London F.A.C.E, because a lot of people in the States are probably going to call it early today as well and have a nice big long weekend. So it could be some fun and games Monday and Tuesday, because what can happen at this time of year, we get a load of month-end stuff, but we also get some shenanigans happening in the first day or two of the new month, quarter, second half of the year, just because anything that people are taking off into the half year end, they might be reallocating and putting back on in the first couple of days. So don't think it's the end of it just because month end is today. We may get some shenanigans Monday and Tuesday, which could be amplified because half the markets will be shut, or particularly in the US. So we're going to need watching next week. And obviously next week is jobs week. So that's going to kick off fairly smartly. Kay, do you want to have a brief look around at a couple of charts, and then I'll have
it's going to be really a couple of really quick one today. Quick one today because end of month, end of quarter, but we do have data. Regarding the market going quiet after 4 p.m., I'm still going to not call that one, because there's supposedly some pretty big rebalancing to be done between stocks and bonds as well. In theory, that could go all the way down, all the way into the New York close, right? But of course, I mean, a lot people will want to do a lot as well during the more liquid hours. So rather than really perhaps gigantic flows going through, I think it's more going to be a problem of illiquidity after the London hours that could push things to move a bit more. Okay, so let's recapitulate a little bit. There's a lot of reports that's circulating. In my opinion, and there should be some indeed. I agree with the models on that one. There should be some dollar selling. We've already seen a little bit of that yesterday between 3 and 4. We may see some more coming in today. I think the outstanding ones, and if you look at the euro crosses on the back of it, we are seeing confirmation of that. The outstanding ones are sterling and the antipodians really, and Norwegian kroner and stuff like that. But the euro is a bit of an open question for me. Yesterday as well, we saw it. People are saying, some people are saying that there should be decent euro buying this afternoon. But according to what I've seen over perhaps not the month, but over the quarter and a half year, is that European equity markets have also gone up a lot. And that, to me, balances those potential euro buying out a bit. So in any case, we have come, and some people were looking at this 108.40 as being a support level on the euro. I've got a little lower, around 30, but that doesn't really matter. To me, the big one is still going to be 108 on the euro dollar. That may be something to look at after the fixings this afternoon. But with all things equal, and let's assume that the data in the States don't give too big of a negative shock. But if we would see a move back up to 3/4, 85 in the euro dollar, I already think that based on the US numbers and the European data, that we could find some sellers there into next week or so, if that's the direction of the fixing moves, for instance. I'm a little in doubt about the strength of the euro right now. As a matter of fact, I'm running, and people know in the room, I'm jobbing the several of the euro crosses actually short, the main ones being euro sterling and euro mix again, but I also have like pieces of euro Norway, pieces of euro Kiwi and stuff. Cable is interesting. We have this, I need to go back on the daily. We had this bit of a longer term trend line here in the cable coming from 2021, and that broken the other day. You see, we banged our head against it, little push back, and then we broke above, and that granted 200 points, right? And yesterday we retested it, 125.90. So of course it's a downtrending trend line, so keep an eye on that one. But if it would break again on dollar strength or so, keep an eye on what's happening if this breaks 125.85 figure. And if that would, then probably the next one to look at is mid 125s to look at it. Yeah, Mike. I'm not. It's not like the shorts having a hard time keeping cable down. I think it's sterling is still doing relatively okay, and we can see that on the cross side, and I think that filters in turn through in the cable, and also really keep a close eye on what's happening at 4 p.m. London today. It's the last fixing of the month, a quarter, half year. A lot can happen, and after the fixing, we can create a vacuum, whether it's one way or the other. But I would be again, all else equal in the States. I wouldn't be surprised if the dollar picks up a little steam again, but perhaps less versus. I'm less bearish cable than I'm bearish euro dollar. Let's say, if that would be the case. Now, on those 4 p.m. fixings, we have to look at what's going to happen around 126.80. Already, I think if sterling is really in demand, we could get through. And for those trading shorts, these are prior highs, prior lows around there. 80-90 on the cable. If it flies through, perhaps it may push it even higher. So I wouldn't exclude, because it's also one of my favorite currencies, to be honest, on these afternoon fixings. I wouldn't exclude a push through those levels. And of course, we have to look, but then I look for a failure, actually. But we have to, a lot depends on how big or how much those fixers and hedges still have left to do. Euro sterling yesterday, well, yeah, no, the day before yesterday, people know in the room that I've sold it. Been managing it around a little bit. I'll be a happy man around 85.70 right now. If we see it, I'm going to take quite a decent chunk off, because it's a really nice move to close the month. My account will be happy. I'm going to take a fair bit off around here and leave a piece open probably for this afternoon, because I think one of the themes that we've seen this week was every European morning we saw constant euro cross buying. And what we're seeing today, and then in the afternoon, we lost a bit of that steam, and that works well with what I was looking at for the end of month, end of quarter flows, is that actually where the rest of the pairs should see some dollar selling, I'm not sure that in the euro we are going to see the same thing. So per correlation, I reckon, or I think, no investment advice, of course, but that we can close this month on a weak note in a fair bit of euro crosses. So that for the sterling. Yeah, well, the dollar yen, you know, as we were talking about it, I think next week is going to be an important one. Whether it's dollar yen, whether it's all those yen pairs. You see, we've talked about this stuff. About the 145, Ryan has already enough been banging about it as well. Prior tops, you try it fails. That's the first intervention here. And then we saw the next round of intervention, and actually it held. And then we bounced again. This is the combination between interventions and that first big drop in the US CPI, which finally took it through. But you see the daily just before was holding it again. So this 145 is really important. Give and take 20, 30 points. It's important enough to give that kind of leeway. And I think next week, after the numbers that we will get this afternoon, and depending on what's going to happen with those, and then the fixings, next week is going to be an important one for yen. Because if those US data hold up, I wouldn't be surprised if the market tries to take it through and take this forward ride up to where? Yes, 146.5, 147.5. I don't really know, but then we could be in the territory what the Ministry of Finance will call speculation. And if we hear that word speculation falling, then I would be very cautious, because that is, if they say that they see speculation in the market and that the market is moving against fundamentals and that they are on high alert, whatever, that is going to be your last leg of warning. And in which case you've got to be very, very careful with what you do. Now, on the technical side, there is also a case to make for 100 and, well, okay, the trend lines won't mean much in case of intervention, but this here, this area between 138.5 and 143/4, call it 38.5, 40.5. We've been trading that area for a while, okay, and that is before we started to punch up the next leg. This here is, and we actually started from there on that is the Bank of Japan. That is when the Bank of Japan held everything still and we started to move up again. Before that, we were pretty undecided. I'm not saying people have missed this move, but be careful, because it's also a spike lower here, a bit highs here. But this is an area where I'm going to be very interested. If they do intervene, I wouldn't mind actually catching and starting to catch a knife with perhaps allowing for this one to be tested. But if it comes through interventions, all other, and especially the dollar, the US data holding up like the way they do, one of the clinchers could be next week's NFP, for instance. This, if they then have to intervene, this is really an area where I'm going to be very interested in the dollar yen. I want to look at, well, first of all, a quick one on this dollar rand. It's really the rand is really getting hammered again. There should, in theory, but we're already through it, a bit of resistance here around the 19 area, 1902, stretch it to 1907. But I think, you know, this move, I was a bit long and then I let it go a bit too early. I lacked a bit of resolve there myself to get back into it. I took a bit of a slight bit of the move with it, just jobbing it, but it does seem like it's made up its mind. And unless US data collapse, I think start of next month maybe a difficult one again for the rand. I'd love to see it back here and then put in the next move higher, but I'm already unsure if we even go back below it. And as Ryan was saying, we're on the resistance here in the dollar China, prior high as well. We're on it, but it seems that the Chinese central bank is giving us pretty much the green light to continue to hammer the dollar CNY, and this is the underside of Ryan's blue box, and you can see also the support, the trend line coming in here, prior zone. If they send out their submarines again and put it back down there, I think it's a really, really, really good area to keep a close eye on this dollar China. We could show all those yen crosses, but I think it's a bit unnecessary today. I think next week we're going to have time to look at all those pairs again once we start the new month and the new quarter. But I want to give a special mention here to the Norwegian kroner. So, excuse me. One of the currencies that I identified for the end of the month and quarter, as the people know in the room. So, I'm not going to divulge any secrets or so. Was the Norwegian kroner? I've already been, and I'm still in, and trying to accompany the move. This is one of the currencies that I think could benefit a little bit about from the end of month, end of quarter, and we're already seeing it. And also Norges Bank this morning, although they still will sell Norwegian kroner in the month of July, but they will do only 1 billion kroner a month, which is in today's money about 90 million euros a day, sorry. That is easily absorbed, I think, by the market. The fact is, though, that they will still continue to sell Norwegian kroner. So start of the next month, we will have to look very, very closely at what oil and gas is doing for Norway, because that's very important. But until the end of the day, I think there may be a little bit more in here. So don't be surprised. I'm not saying it's going to happen. That's too much of an affirmation, but don't be surprised if Norwegian kroner strengthens a little bit again. And if we would, and if you would think that, or if we agree that the dollar should be sold for the month end, keep an eye on this one, because we are. Why is this line going so far? We are on supports here in dollar Norway again. So. Even technically, it could be that that we are looking at it, because as you can see, last time we went there yesterday actually on the FIX was a bit of a move down on the FIX. Then we rebounded, and now we are trying it again. As I said, just one thing: I would not be surprised if the Norwegian kroner strengthens a little bit more this afternoon. But then, if I see that, then it's going to be time, I think, to just take it off the table and see what happens there. I'm not saying we are going to go to 1050, but you can see here, if ever we get back into this 1050 zone, give and take 1047, 1052, it's moving fast. So 0.5% is, as you can see here, this is a very small move compared to what the Norwegian kroner is doing. So I'd keep a very, very close eye on what's happening here in the 1050 area on the dollar Norway. Unless you guys, let me quickly show that trend line though, that Estelle also showed this afternoon on the US 10s. To me, we are trying to get through, but okay, I mean, It depends where exactly is the top and everything. On the daily, it may look a little bit different than on a 4-hour, but this zone here is important, okay? 390 on the US 10s as well. Look at here, look at here. PCE out this afternoon, Michigan out this afternoon, Chicago PMI out this afternoon. Get any kind of better data or higher data, perhaps this could really be put to the test. Maybe not especially, well, we could see the spike, but there should be a bit of rebalancing to be done as well today in the bond market. So it could be like a jump and then a F.A.C.E if the rebalancing is really rebalancings have to be done. But bear that in mind for when we open on Monday. If they are in the 4th of July, we can already call it maybe even Wednesday, right? Maybe not a Monday, but next week, this one here, this zone here, we are in a very important zone on the US yields. On the twos, yeah, we are tackling the top end of the channel, but what is more important is that what have they done over so the market was reluctant to has been reluctant for quite a while to price in what Powell said. Okay, we are going to perhaps do a couple more. The dot plots are showing this, and they went like, yeah, well, you can say that. But since then, he's been twice repeating that a couple of more hikes, or he even said 2, are possible. And then we got those data yesterday, and the market is really now coming Fed's way. And we are very close here to give and take a bit of risk to pricing to what the Fed wants to do. So that's another one to keep a close eye on when the data come out. When data come out, this one can be pretty violent. So keep an eye on the data, okay? Hopefully we can trade real data again, instead of always having to watch inflation. So to me, they are picking up in importance. I'm a bit tired and fed up watching only inflation. Give me good data to trade on, or bad data, but just give me decent data. And Ryan, with that, I give it back to you.
Thank you very much, mate. Let's see if I can grab the screen quickly. Boom. Can you see that?
Yeah, all good.
Good. Just I wanted to mention gold quickly. We had a break of 1900. It didn't last. It tapped the 38.2 fib right on the head, pretty much by a pip or so. So we may have had a little bit of a clean out under the big figure, but it is holding again now on the test this morning. So jury's still out as to whether this is really going to break down, but it doesn't look good. The bounce pretty weak for now. So there's all intents and purposes that we could be heading much lower. But for now, we've got a bit of support down into that fib in the 1900 area. So that's where you're going to look for that. If you get a break there, then and start to see it holding below 1900, if you're not in shorts and fancy it, that's going to be your level. You know, if we start finding 1900 as resistance, or maybe even this fib area as resistance, that's going to be a clue that maybe if you've been missing out on shorts and wanting to short it, that's what you want to look for signal wise. Or conversely, if you're looking to catch the knife, then look for further support building along this area here. Maybe a short-term bottom in play, and then we see a bounce back higher on that one. As for the month end for me, I'm still looking at euro dollar pretty much for a trade. I don't think I'm going to get anything unless we get a real decent dip in it or a rally above 110. I'm probably not going to do an awful lot. I'll see what the fix does, if it kicks anything out of kilter, and then back next week we're trading the fundamentals again and everything going on. What I want to draw your attention to quickly, and I don't know how many of you have done this, and if you haven't, why not? But we've got some big news coming out this weekend, and that'll be announced on our weekly newsletter, which I've just put the link there in the Zoom chat. So if you want to find out what's going on this weekend, I don't think you want to miss out. Sign up to the newsletter there, receive that. Also, you get the week ahead video, usually done by Blake or Gregor. He's off this week, so yours truly will be doing the week ahead stuff this weekend. So see how I get on with that, whether I make a complete hash of it. But yeah, sign up for the newsletter there. It's not spam. We don't hit you with loads of crap. It's just we give you news that's going on, links to the various webinars and whatnot. But as I say, we've got some exciting things coming out this weekend that will be first announced on that newsletter. So sign up for that one. And that is that. You guys and girls have a great weekend. If you're in the US and you're going to be packing up later for the long weekend and whatnot, have fun, enjoy yourselves. Don't do all your pips on the data this afternoon. If you've had a good week, switch it off, have a break early, take your profits and walk away. But otherwise, trade safe over the data. Thank you all for coming to the Flow Show. Thanks to Kay, and I'll give Stella a pat on the back when I speak to him later. Have a good one, everyone.
Cheers all. Cheers all. Have a good weekend.